Hey everybody, welcome back for round two. Mike Fairborn sitting in again for this class, Market Movers. It's great to be here with you folks to finish off the week. We've had a lot of news this week, and just congrats to each of you for sticking in with us and getting to the end of the week. There's a lot to look at, and I'm going to look at we're going to look at markets, we're going to look at sectors, really see what was performing this week and what we might have eyes on into next week, particularly as it does relate to maybe some of the stocks that are showing some recent strength. So with that, I'll look forward to getting into that more detail with you, and I'd like to welcome all of you here. We got Sia back for round two, as well as Jose. Welcome, Vic, David, Will. How's it going, Will, as well as Mighty Mouse and Sharon? Good to have you all on board. Austin, folks, any questions, comments you have, throw those in the chat. I'm joined in the chat by a great friend of mine, James Boyd. To see me in the chat as JB. You guys know JB. And any questions, comments, he is there to help out with. So I appreciate James being here, folks, for our slim down session, right? It's a 30-minute session, just as a heads up. So we'll stick to that, and let's dive on into some disclosures to get going here. So information here is for general information purposes only. Options do carry a high level of risk. They're not suitable for all investors. So there's some option info listed there. The paper money software application is for education purposes only. Past performance is no guarantee of future results. Some additional points at the bottom. Investing involves risk, including the loss of principal. There's no guarantee that an execution of a stop order will be at or near the stop price. Okay, well, with that, we have to go ahead and share here. Oh, I'm just going to drag this guy right on up. There we go. Take a look at a few things on our screen, folks. We are going to look at the dollar, but not first. First, we're going to take a look at some of the markets here on a shorter term scale initially, and just kind of show you where we're at, what we've been holding at during this week. You can see we've been kind of really still gravitating towards around, I would say, that a 6,000 level, a big round number. Some progress this week. We got above it. We're back down below it now. We had seen on a shorter term basis, say, for example, we haven't been getting all of the breadth in the market that sometimes we will get in line. In other words, the breadth of the market, the size, individual weighted, all the stocks individually weighted the same in the S&P 500 index. To do that, though, we've got to take a look at the SPX EW. The EW, folks, did not make a new high, okay, from this point here, just like what happened earlier this year. You had a high here and a lower high here. We'll just say a lower high, because that's exactly what it is, and ditto for lower high down here from the high. We didn't get that in the market, which tells us that we're having a fewer number of companies that are like in the S&P, these giant ones that have been leading the way higher. And with that, sometimes you will get a breakdown. Case in point, let's just take a look at the time frame, December of last year to February of this year, with our SPX right here. Well, how did that fare? We did make a new high in the SPX, but that lower high, we really didn't have the structure with breadth in the market, maybe creating a structure of the trend, and we saw prices really dip sharply there. Now, tariffs were involved, but the equal weights kind of picked up on that. We're getting that again right now. Lastly, and as a quick note, if we do look, although we don't get volume on the SPX, we do get end of day volume, and I'm just going to throw that out right now real quickly. That's our total volume for the day on the SPX. We've had a lower plateau here of volume, and that, folks, is associated with, why do I even draw it in? I can use this tool over here called comparison. We're going to do a comparison, and the default of that comparison, folks, is the SPX. So let's just see where that weaker volume has come in at, and we can kind of take a look at it from there and see what you guys think. You see that right there? I don't know what you guys are saying. I'm saying a little bit of a divergence there. Prices up. We're looking at the SPX here. That's what happened this week and a little bit into last week too. And total volumes down, down. Not to mention, I just mentioned it, folks, the plateau here. Remember, you can tie that in with the SPXEW. We're just seeing negative divergences there. And you normally want to have volume on the breakouts higher. You want to see the volume at least trailing where it was previously in this trend. We dipped lower and volume began to dip as well. Notice over here, this spike up that we had in price. Well, we had, some volume coming down, but it was on a higher scale. So there's just some questions out there. Having said all that, what we can do is I'm just going to pop this guy back and just go right at, well, shoot, just go SPX, SPX that is, and we'll take off our little line. We don't need that anymore. And where might support potentially be looking into next week? Well, hey, come down here, take a look at maybe 5,900, 58. A lot of times these round numbers will tend to have some support associated with them. You clearly see that right there with this high. Well, I'm going back a little bit further here. Gap, bounce, right? You had this point right there and a major gap right in here too. So 59, 58, if it doesn't in fact go down, just some things to keep an eye on. Now, the NDX, just broadly speaking, how did it do? Stronger. In fact, the one thing with the NDX you have to say is that it did come up to those all-time highs at resistance right there. And when you're hitting all-time high resistance, folks, when you're hitting resistance in general, it can be futile sometimes, but not every time. And there's kind of a little, longer term chart there. I have this long-term sort of flag pattern in place here. Yeah, that would be like a breakout move. And by the way, those can take some time to develop, but we'll see what does unfold here. The Russell, just to wrap up the week here, how did we do or how are we doing? We're not quite done for the day, but there is a support level from this head shoulder that many of you in my other classes, the market sector class on Wednesday, pointed out. Shoulder, head, shoulder, potential for a bounce here. We don't know, but that is a possibility of a breakout. A lot can be seen in the next week, but we did have some of the big news, right, with the Iran situation. So how will that impact things? The one thing I want to go into right now is, we could look at something like, oil shot up dramatically. And you can take a look at something like CVX, like Chevron. Okay, well, the price of oil being higher, that could influence into next week. This was a market mover this week, the price of some of these oil-related stocks, because they have been brutalized, actually, with the price of declining crude oil. And so this could start to show some signs. I mean, that's a support level through there. And look at that bounce right there, just breaking above those highs right here. Now, having said that, what kind of a dividend do they have? You guys, we probably don't look at a lot of dividends here in this class, but I mean, there's a reason for it. The price of oil has been down, but that's very close to 4.7%, approximately 4.68 currently right now. That's nothing to like kind of swat at. That's kind of a bigger number. How does Exxon, XOM compare? And by the way, as I brought up dividends, I did want to state there's no guarantee that dividends will continue. They can be cut at any time, but those are the yields right now. I think Chevron has a history of paying that dividend for extended period of times. I don't know if it's a dividend aristocrat or not. You'll have to take a look at that. But here we go with our yield. A little bit lower here on Exxon, of course. Maybe the price didn't get beat up as much on Exxon. You can see over here. Yesterday in the ThinkScript class, we talked about a couple of MACD divergences, and it did catch my eye that there were some oil companies in there that were setting up. I want to look at those too. I'll pull those up for you guys so you can see them. But this move right there, think about movers on the week. That's a move. It's almost as if, was there an anticipation there? You just wonder, what the heck did the smart money know, or could they have known when this was coming in? Because prices were going up, up, up. We did take out some highs, and we could start to bounce here. Now, one of those oil companies, as of yesterday, that we looked at was Halliburton. Okay, a positive divergence with the MACD. We kind of built out a code or a script for that yesterday. In fact, I could give you, if you guys want, if you're interested in that class, it did pull up some of these energy stocks. This was one of them. You can see Halliburton, and I think, I don't know, we might have broken down that trend. Wow, just barely. Maybe that downward sloping trend line. BKR, or Baker Hughes, was the other one that was also in that list. And we're just curious. We're just saying, hey, is it starting to maybe form a base? Could higher oil prices help? you kind of think that higher oil prices would help. Now, they don't believe that Iran would shut down like the Straits of Hormuz, that major shipping area, or at least, booby trap it or whatever they might do. If they did, then some of the analysts are saying right now that the price of oil, instead of around 74, which was a big spike if you looked at the chart, but it could go somewhere around 100 is the expectation. And that would also add fuel to the fire. We shall see what does in fact unfold here. But there's a good look at maybe what moved some of those companies today. Let's look at some more companies. But before I do that, I want to go ahead and just jump over into the Market Watch tab, into our quotes. And I want to just go right into the sectors. This is such a great way to look at this. If you guys haven't done this yet, by the way, just in this section here, I quickly clicked on quotes. Sorry, quotes, drop down box over here, popped us up to the sectors. There are the 11 sectors or so of the market, that you've got here. How did they do on the 5-day? We know the markets aren't closed yet, but this does give us a good general feel of what they've been doing. These symbols might not mean a lot to you, but these are all the companies in that 500 that fit into each of these sectors categorically. Let's go ahead and see what was the mover. Well, I think this is the big mover today, but it wasn't anywhere near that, but it just gives you a sense of what energy has been doing today. How much did we add to that energy today? How much of that 5.9 is today's move? Real close to 2%. So it was still up on the day, the week, as you saw. There was some good moves in energy, which has been breaking highs, and that can be of interest. I have to say that could be of interest to a fair number of individuals out there. I mean, it's of interest because that could be a driver going forward. But there you go. Now, what else did we have? Healthcare. Let's look at these specifically. What's another interesting one? Utilities. Scoot on over here into our charts, and this is the sector grid. So we're looking at the sector now of all of these companies. What were the sectors doing? So we saw those numbers. These same numbers here, or these same companies, or I should say sectors, are the exact charts right here that you're getting. Now, I'm going to share this with everybody, so just so you have this, I'm going to share this grid, and this is how you look at all of those. Now, bottom right-hand corner of the screen, just so you know, that is the S&P 500. So what do we have? 12, 11 sectors plus the S&P as a reference down below. I want to look at these for ideas in the next week, and I want to just see what were the performers in each one of these groups, as well as on a market mover basis. So let's do that. Before I do that, though, I'm just going to throw this into the chat. Here is that script right there. If you wanted to, well, it's not a script. I apologize. It's a grid chart. That has nothing to do with the script. It's just this, if you want to take a look at it. Now, there is energy up here. There's the spike. And when you get a whole basket of these, and by the way, the whole group collectively is breaking highs. When you add them all together, that would be a higher high and a higher low. Because we could say higher low, at least for the time being, because it did take out the high. Now, you might be squinting. I'm even squinting. So why don't I just maximize that sell grid and we can just see it a little bit better there. There's the higher high. There's the higher low. Could this be a reversal setting up? Well, a lot could do with the price of oil, and you'd have to say that could be a very, very volatile trade, all else equal. There could be some volatility there, because what's the factor that's so hard to get your hands around? Or your arms around. It's going to be news related, right? And anything could change that too. But if it were to hold at these levels, that could benefit a number of companies in that group. Okay, here's the healthcare group. I will say with healthcare, you probably are getting, that is technically a higher high above this level, and you could say it's a higher low. So the possibility of a change in trend too. That's the second best performing group sector on the week, and the last one, which is still kind of coiling up. It's like, there you go. Yeah, the sideways triangle, which is noted for lower highs and higher lows as it just builds. and builds and builds. And that's interesting. And by the way, utilities, on the topic of dividends that we talked about previously, utilities can be a big area for dividend payers as well. And you can pull those up if you wanted to look at the dividend payers here or anything else. Just go to the scan tab, go right over here. I'm going to click off that. And what I'm going to do is just go into the scan tab, because you can isolate the S&P 500 and just say, how about industry? How about the utilities? And then let's just use all those utilities right there. That's going to pull up all the utility companies that make up this chart right here in the S&P 500, which is exactly what we're looking at here, which was it was our third best mover on the week thus far. Markets aren't closed, but let's go ahead and just click on it. So those are all those companies collectively. And there you go. We got the 5-day percent change. We have 31 companies. Let's click on it again. And oh, that was the top. Yeah, just clicking on it, finding out what the best performers are. AES. Let's just take a look at it. I'm going to go over here. We'll move off the charts. We'll go into AES. AES. Click right there. And there you go. Wow. So these have been down for a little bit too. Been down. Higher interest rates are still out there, but that was the biggest mover on the week. And you can see why. Percentage wise too. I mean, here we are at $10 or close to 10, and we moved up above that level. I mean, that's, well, 10 to 11 is a 10% move. So it's a smaller price stock. I mean, that the price would have helped us with that if we pull this over. That makes a little bit more sense in terms of maybe the 5% move. But you see, these are other bigger names like Southern, Exelon. You've got Consolidated Edison, Nextera. Many of these I do recognize. But remember, this group too, they are some of the dividend payers. So we could simply just right click here, customize, throw in our yields. Let's get a comparative yield column here right after that. Because if anybody, I'm just saying, if anybody's looking at anything that has yields, that's one way to do it right there. And now you have comparable yields that are tied into those percent changes. It just provides you information real super quick. All right. So, final note on this. Let's go ahead and change our sector. I do want to look and just see what was moving in energy, industries, energy, all sector. There you go. There are your 5% changes. Let's click on that till we get that updated, and there you have it. Right there. You've got even a month change over here, whatever you're looking for. I still get the yield column in. We'll even throw in, there you go. There's a potential value column as well in terms of PE ratio comparisons. But Halliburton, right up towards that list, near that high. So just some things to keep in mind. But I'm just going to point out, if you guys, yeah, let's see. I have that. Okay, yeah. Okay, cool. That class that did pull up in terms of the MACD. Here is the link to it if you want to see. This is the most recent class. This is just what I taught yesterday. If you guys are interested, we pulled this class. It's normally a Friday class, but that is the ThinkScript class that does have the ThinkScript code in there for MACD divergences. If that's of interest to you, it did pull up, some of the oil stocks. So the MACD positive divergence actually found some strength before they were actually moving. Interesting, just as a side note. All right, let's do this. So that's energy. And then finally, we can take a look at healthcare right there. Healthcare right there. And we'll scan this. By the way, 21 companies, not too many really in the S&P 500. And you've got 61 companies of 61 healthcare companies in the S&P 500 right here. Okay, so let's go ahead and pull this guy over and see. Oh, it's already highlighted everything for us. So the biggest mover, REGN, you've got Lilly, which has been a performer. That one, CVS, I wouldn't have thought that, but let's just look and see what they've done. Are they setting up for next week? You got CAH in there as well. You got Cardinal Health. There's CVS. Speaking of dividends, I think they still pay What was their dividend yield? Yeah, almost 4%. Almost 4%. That's a higher high over a longer range. A little bit of a recovery here. These guys have been beat up. Tell you that for sure. Let me just take a look at the weekly CVS. Boom. Let's pull it over to the right. Okay, that's the weekly chart. Oh, you guys see anything on the weekly? What do you see? How about a possible, I don't know, a weekly? This is a weekly though. So it's a weekly price pattern. This is just some of the cool things you could find by finding the weekly shoulder, head, shoulder, maybe? Shoulder, head, shoulder. Very, very close. Neckline. Ooh, maybe somewhere through there. If it were to unfold, it could have a move up. It's been down for a long time. I don't know what these guys have going on behind the scenes. I will say this: JB does teach a class right before mine on Wednesday, which is it's a growth and value class where he does. It's one of the few fundamental classes we have, and a lot of times when you see those big weekly type moves, to get a move like that to occur on a weekly basis, well, a lot of times there's got to be fundamentals tied to it, because how does it make such a big move if you don't have good fundamentals, or at least an expectation of fundamentals? Just a little side note there, but sometimes these bigger moves can be setting up for the next leg, and who knows? Here is CAH right there. A little bit of a breakout above its range too. That's breaking above some highs, and that's had, as you can see over here, even just over the past year, a pretty good history of higher highs and higher lows, coming off of what looks like what might be a bit of a consolidation range. Right at a big sort of round number. It's not exactly 100 or 200, but it is 150, folks. It is 150. And sometimes you get these levels and you pause. We paused there for a little while, and now we are breaking out. Does it hold or not? That's the question. But what we can say this week, what was one of the stronger sectors out there? What was the second strongest sector that could help to push some of this higher? It was, in fact, healthcare right there. So a little bit of top-down analysis we're looking at too as we go through these as well. Do we have anything that might be moving into next week? I did see Oracle, which did have some really interesting news, and that's a breakout. Wow, if that was a measurement gap, that could really extend a little bit higher. We crushed 200, at least thus far. We'll see if it comes back to it. But that was resistance. I would kind of expect it near 200, and we just gapped up and blew above that. That was a huge move. We also had a little different story on Adobe this week. There's Adobe right there. Breaking down, those were the two big earnings announcements this week. I'm just going to put us in and take a look at the Market Watch and go to calendar, just so I didn't miss anything. By the way, I had this sorted by the S&P up here. You guys ever done that? I think it's the best way. Well, if you have every stock, you're going to get penny stocks and everything, or at least a number of stocks that might be illiquid. Click on my little drop down right there. It's actually the wheel. Click on the wheel and make sure you're in the public folder for the S&P. You can't see it here, but it's there. It's S ... and that means S&P 500 in our book. And there you have it. What did we have this week? You get maybe some of the bigger names. SJM, Oracle, Adobe. Two of the three got smashed. I think SJM had a bad announcement. At least the news was bad. Let's see how the chart did. Oh, yeah. That's a dip. That's a little bit of a tank there on SJM. But a good quick way just to take a look at what we have in the calendar, narrowing that down by the S&P. It's pretty weak. By the way, into next week, you got Lennar. I think that's Jabil Circuits. And then you've got the biggest day, which is Friday, which is, you're getting Kroger. You're getting Darden Restaurants, as well as, what's KMX? KMX, I think, is that auto company that sells autos. I don't know, ACN. But yeah, they're all in the S&P 500. That's one way to look at it. CarMax, I think, is what it is. Okay, And then you get the next week over here. And I'm not seeing anything for June. Maybe the announcements haven't come yet, but that's how you can check that out. So that's really fascinating. Did Smuckers miss their earnings, or was it just a guidance issue? They beat earnings, so there was guidance. There was guidance there. There's no doubt. I mean, well, I can't say for sure. I can't say there's no doubt, but something dropped it. It's probably safe to say there's a lowering of price target right there, and some others. But it's always good to reference this. By the way, wow, that's just one company. I'm seeing a lot of targets by a lot of different brokerage firms in there too. So there was more than a handful. I mean, in that case, hey, it's really helpful to find out what's going on. See if that something like that might continue into next week. In fact, sometimes, not every time, but these can, in fact, folks, do something like this. They can come down here as you break a longer term support level. Oh, where's that coming in at? When you're below maybe a number where there has been prior support, we're talking the century mark here, 100. Sometimes when you get, okay, support above it, but just below it, there could be resistance. That, I don't know. In some people's books, they might say that that's setting up for a bear flag, depending upon what the expectations are. Now, those price targets were even above this range, but on a technical move like that, depending upon what the market anticipates, that could mean resistance at 100. There was prior support there. And if it did, that could set up like a bear sort of a flag to a degree, right? By the way, I can't leave our discussion, folks, without talking about, I wanted to bring this up next, which is just two more to look at. DXY. Here's the dollar. I've got fibs over here at 100. My fibs are now outdated because that was my starting point of the fibs, folks. We busted through it. We finally broke below it. Let's just take a look at the weekly over here and see what we did. Yes, right there. The 100 level right there on those fibs. Take a look. Right there. So what could that mean? Well, it's general weakness. It can mean strength for commodities. Gold was showing some strength. So too was silver. Let's pull up an index over here. XAU, just to double check. Yeah, that's the gold and silver index capital weight. You can see gold, this is gold and silver. I'll pop back to the daily. It can influence some prices in terms of commodities. That can be a big key driver. A weaker dollar. Also, though, general asset prices can be strengthened as well. But a lot of times, they'll look more towards commodities. Commodities. Sorry, I just need to check one thing here. There we go. Okay, so these are like, I mean, these are moves. I'm just saying, here's gold, here's silver. Is that a move that's gone up? Folks, some people will refer to this as some people like to see moves that have already taken place. Maybe not all of you. Just love this down here where it may or may not go up. But one thing we could say for sure, I mean, I see this at JB's class all the time. He's looking at those that is showing momentum. That's 200. We're looking at an index here, but there's a lot of companies behind it. And I'm telling you what, some people do like to look at what has been, I mean, that's been moving, right? You know what else has been moving today? Let's see where it's at now. That's going to be the VIX. Oh boy. Well, I mean, I say oh boy because we did gap above the range. We don't know. Sometimes these are short-lived moves, but it is above 20. It's above 20. I mean, 20 is a big number. Look at this. Look at the gap up above that 20. Sometimes you can hold here for a little bit, but I'm telling you, if you start to see a little bit of incremental movement into next week, got to keep an eye on next week. Well, that can mean S&P coming down, but then we're weighted on the other end by the dollar pushing some of those. So real strength in the dollar, a lot of moves. In fact, let's just, AEM, boom, there you go. More highs, higher highs and higher lows, okay? It just keeps rising on up. Now, is there a little resistance there? Okay. Could it be helped by gold prices breaking higher? It sure could. It's possible. But here we are looking at it. That gold has had an influence on a lot of these miners. This did lead the way from last year. We shall see. Just trying to give you guys some ideas for next week. Hopefully you found this discussion helpful and informative. It's been great having you all here today. By the way, James, thanks so much for your feedback to me directly. I really appreciate it. And in this chat, this has been fantastic, folks. Folks, it's Friday. We're out a little bit earlier. Have a great rest of the day and an awesome weekend coming up. Just wanted to share with you some ideas, things to keep an eye on. We'll see how it does unfold into this massive news cycle, right, that just continues to expand. All right, everybody, on that note, have a great rest of the day. We'll catch y'all next time.